African immigrants settle in Canada. It is what it sounds like. They help newcomers from Africa settle anywhere in Canada and adapt to life here without hassles, providing individual and family support, driver's road test assistance, student support, computer skills training, and job search assistance. Free consultations are available all year round. Contact African Immigration Settlement in Canada. Visit AISIC.ca. That's AISIC.ca.
And financial management. After relocating to Canada, he worked as a personal support worker for approximately 10 years and is currently working as a financial professional and is helping individuals and families to build financial stability and plan for the future. He's married and blessed with 4 children. Please, let's give him a digital round of applause as well. Without wasting much time, we invite the first speaker to unmute her mic and give us a presentation.
Good evening, everyone. My name is Patience Apolabi. First of all, I would like to appreciate AISIC for intentionally creating this platform, which has been very, very impactful to immigrants. It's really a great one. And I would also appreciate them for the privilege to come here this evening to educate ourselves about financial education. I would also like to appreciate my 2 boss. I have 2 ogas here in the house. Permit me to use that word. Mr. Martins, my senior marketing director, and Pastor Abel. They are my ogas. I am under their mentorship and I'm getting trained under them. So I would like to appreciate them for this opportunity before I go straight into the discussion for today. And as we know that this is about financial education, building wealth and protection. This is a very important discussion because financial security, financial growth, it begins with having the right information and the right conversation. And that is brought us here today. That is the reason why we are here. And it is really a good and a great one. So I will go straight into my presentation for today. I want to share my slide now. Yeah. Please, can we all see the slide?
Yes, we can.
Thank you very much, ma'am.
Yes.
So I'll be going straight into it. Building wealth and protecting your future. So I wouldn't talk much about this introductory aspect because my boss is going to dwell much about this. He's going to talk about debt management and all that. So why does this conversation matter? It's very important because many newcomers, most especially immigrants, they cite a lot of financial stress as a top well-being challenge while settling in. I remember when I came to Canada just about 3 years ago, I came in 2023, and just like every other immigrants, one of the major challenges then was trying to settle in, getting accommodation, getting a job, just trying to settle in and get into the system. So it's very important if we get to know how we could actually navigate our way through it so that we can understand how the system works. So I'm still going to go straight. So building wealth requires strategy. Building wealth is not about luck. It's not about thinking that, oh, I will just get money somewhere or just win a lottery or anything. No, it's not about luck. It's about strategy. Being intentional about actually putting things in place to get it being built. I don't want to talk much about all these things because, like I said earlier, my powerful boss are here. They would talk more about it, and I wouldn't want a repetition. So why is this education about financial security important? It is important because without financial security, when there is no financial stability, there is going to be anxiety, there is going to be lack of confidence, there's stress and frustration will set in. There wouldn't be any adequate plan for the future, and it's going to have a negative impact on the family. So then, what is wealth? Wealth is not about living in mansions or living an extravagant life. Wealth is actually when there is a steady income, when there is a stable income, that something is coming first. And it's also a sum total of savings and investments. When all these things are set in place, when there is proper protection about that income. If anything happens that this income is not what is going to happen, those investments and those savings, are they going to get collapsed overnight? That is what protection entails. So wealth is like a sum total of our income, having a stable income, savings and investment in place, protection, financial literacy, which is part of what we are doing tonight, and also having a peace of mind. In fact, that is wealth. When you have peace of mind, that you are not stressed financially, your mind is at rest because you have actually put some things in place. You are strategic about it, and different measures has been put in place. So you have that peace of mind. So there are 5 pillars of building wealth. The first one is, to earn strategically. When you have multiple streams of income, and also you understand how the tax system actually works, and we utilize this. Also spending intentionally, saving consistently, invest wisely, and also protect relentlessly. We cannot overemphasize the importance of protection. Proper protection is having a coverage, something that actually protects our income against loss. Life is full of uncertainties. As a healthcare worker, as a nurse, sometimes you go to work and you see that last night, sometimes we leave the work, maybe I closed last night around maybe 7 p.m. And the following morning, 7 a.m., we are back to work, and a particular patient that you took care of yesterday that actually has a stable condition, that this patient is stable, is not one of the high acuity patients, and you go back to work 7 a.m., nothing is certain. Anything, we don't pray to die now. We all pray to live long, and we keep trusting God. But then life happens. If anything happens, maybe accidents, death, or anything, what will happen to our loved ones? If we have in a family 2 major income earners and one of them couldn't go to work, maybe there's something happened and a particular income is not forthcoming, then what happens to taking care of the household, paying all those bills and everything? So that is why proper protection is very important. It helps us to protect against loss of income. It's not even about death or even sickness or accidents. Even what if there is a layoff at work? What if we lose that job? And for maybe for 20 days, 30 days, there's no job in place. What happens? And there's no income. So what happens to the running of the family? What happens to getting those bills sorted? So that is why proper protection is very important. It protects family assets. If we say, okay, I have money in my savings accounts, investments, if we don't have a proper protection, those wealth, those savings can actually collapse overnight if there is no proper protection in place. So what are we putting in place to make sure that all this investment does not just collapse all of a sudden? It's just a thin line. It's just a thin line between life and death, between things. So what protection do we actually have in place? So it's a means of us to be able to maintain lifestyles during unexpected events. That is why proper protection is important. And what does it entail? Building at least 3 to 6 months emergency fund for unexpected situations. Take, for example, if household expenses in a month is $500, then we should be able to set aside at least 3 to 6 months of that monthly expenses aside as emergency fund. If unexpected happen, if anything happen, at least that could keep the family running. It could keep, our responsibilities running, so that we don't just get into debt and start begging for funds. A lot of things happen in our community. When people die, they begin to set up a GoFundMe account, or something happen, any small thing, GoFundMe account, let's raise money to meet up with expenses. And the truth is that most of those GoFundMe accounts, how much do they actually realize? The amount they realize is actually enough for the needs that is actually expected to be met. So that is why proper protection is very important. We should invest with a long-term mindset. Life insurance is a way of having a proper protection. Also, we have disability insurance, critical illness insurance. All these things, they are something that will actually safeguard us, safeguard our income. Life insurance is there to help us, to be able to help our loved ones, to be able to maintain whatever bills, whatever expenses is going on. If one member of the family is no longer there to bring that income into the household. Also, we have disability insurance in cases of injury, illness, and we can't go to work 20 days, 30 days. That will actually help us to get certain amounts for that period of time where the individual will be able to recover, and also get some medical expenses sorted out, and also person will be able to also cover the cost for rehabilitation. So that is why all this coverage are very important. And also critical illness insurance, in case, God forbid, there is critical illness. Think about stroke, think about coronary artery diseases, think about all these critical illnesses. This insurance is a form of coverage, that the individual will get a lump sum of money, which I don't know if you can hear me. So the individual will get a lump sum of money by which they can actually take care of those expenses. So your income is your greatest asset. If your income stops today, how long can your family survive? God forbid anything happen, loss of job, anything. Life is uncertain. Anything can happen. How long do you think, if that income is not coming forth, how long do you think your family can survive? Who pays the mortgage or the rent? That's child care. Who pays it? The daily expenses. What happened to it? So that is why this coverage is important. So I would like to talk more about the life insurance aspects. Like I said earlier, when people die in our community, it's now becoming like a norm. People set up GoFundMe accounts. And the truth is that no matter whatever GoFundMe account they send, most times they don't realize the amount that is actually being needed. Sometimes even if they realize about 10,000, 15,000, this money is not even enough to even cover maybe the burial expense or anything, and then not to set aside money for the surviving spouse or the children, or even if it's just to meet a particular need. Most times that money is not enough. How much do people contribute? Some people don't even contribute up to $100, $500 a year. The truth is that nobody is saving up for anyone. People are saving up to use it themselves. Nobody is going to empty their life savings for you if the unexpected happens. That is just the reality about life. Even among siblings, how many siblings do you read that will be so compassionate to say, oh, my sister is in need, I want to empty my RSP, my TFSA account, I want to empty 90K, 100K from this account and give to my sister. It's very rare to see such a compassionate sister. Talk family member, now talk a lot of people you don't even know. So nobody is going to empty their life savings for you if the unexpected happens. And that is why you need to be strategic. Put in your own savings, get your own coverage. You have to secure and look for how we can actually manage our own expenses so that we don't become a burden to others and even to the society. And that is why this thing is very important. So life insurance, it helps us to replace the income of one or more wage earners. It helps to offset the bills of mortgage, rent, cover burial costs and other final expenses. It's also a way of leaving an inheritance, to make contributions to a favorite charity. Some people, they want to leave a legacy instead of leaving debts for our loved ones. Some people just say, when I die, just want this to make this contribution to particular favorite charity. Just help me donate this money to them. That is the reason why people set up life insurance. And also, it's not even only about death benefits. These days now, with life insurance, you can also use it as a source of savings and retirement planning. Even while you are alive, you can benefit from your life insurance. It's not only the death benefit, because a part of your premium will actually go towards life insurance and a part is actually going into savings. I will explain this as we go on in the presentation. So what are the determinants of the coverage we can get as protection? Age is a determinant. Someone who is 15 years, 20 years, the coverage the person will get is the amount of coverage in terms of the expenses and how we get the coverage is going to be different from someone who, for example, is 40, 50 years. So age is a major determinant. And that is why the best time to get a coverage was yesterday. And now that yesterday is gone, today is still the best time. Because the more we advance in age, it becomes more difficult to get a coverage and the more expensive it becomes. So age is a determinant. Our health status. Some people have underlying health conditions, and some of these conditions will actually hinder them from getting coverage. And some, even if they get, it might be on the high side, it might be expensive. So health conditions, life factors like diabetes, heart disease can be set back. So determinants is age, health, dependence, depending on the family size, the people that actually depends on that income that you are earning, current income, debts, and long-term goals. It will also determine the type of coverage we get. Say, for example, if we have children who will be going to the university in 5, 10 years, it will also determine the type of coverage you can get as life insurance. So life insurance is to protect our loved ones. It's very important. And I'll talk about the types. We have two types. We have the term and the permanent. So I'll go into detail. So for the term life insurance, this policy provides coverage for a set time. It's just like the name term. It's for a particular just for a particular period. It's temporary. Sometimes for 10 years, we call it term 10, sometimes 20, 30 years, either term 20 or term 30. So at the end of this set time, the policy expires. It's a temporary. And this policy does not build cash value, no cash value. So if you ask me what is cash value, so cash value is, think about equity. If you own a house or you rent a home, like someone who has a house now, that person is building equity. So cash value is just like when you have a life insurance policy. For life, for term, you don't have it, but for permanent, you have cash value because a part of your premium payment towards the insurance, a part is going for insurance, while a part of it is going into savings. It's being invested for you. And over time, it's going to accumulate and build up a cash value. So later on, even while you are alive, you can make withdrawals from this cash value, and you can even get a policy loan from it. You can get money from some people. We just pay towards their life insurance to 65, and from that 65 years, they stop paying. And some people, even during their retirement, they can make withdraw from this cash value. So that is why it is good. But for term, there is no cash value. Once the set term ends, it expires. Then the good thing about term life insurance is that it is less expensive than permanent. If you do a permanent insurance of $500,000 and you do a term of the same face value, the same words, the amount to be paying towards your premium for term is going to be more, it will be cheaper compared to permanent life insurance of the same amount. So then for permanent life insurance, the policy remains in effect until the policy holder's death. So if you have a permanent one, it's not going to expire after the period of time. It's going to be in force until the person dies. Think of about of 100. As long as the person pays its premium to the time it's been set, it's not going to expire. It's going to be in effect. And unless the policy is surrendered, unless you say you are no longer doing, your policy is still going to be in effect. And for most permanent policies, there is cash value. There are some type of savings components. Like I said earlier, you get some savings part of it, which helps you to build cash value over time, from which you can make withdrawals, and you can also obtain policy loans if you need money from it. But that will be after you have contributed to it for about 9 to 10 years. So that is the benefit of permanent life insurance. So what other features should I consider? These are the, if you look at it, my slide, so those are the giving us the features of each of these policy. So for term life insurance, for the whole life and for the universal life, the term is the temporary, while the whole life and the universal life, both of them are permanent life insurance. So in aspect of death benefits, both of them, the policy beneficiaries, they are going to get the death benefits after the owner has died. So for term, for whole life and universal, your beneficiaries will get paid, and this payment is tax-free. That is the advantage of life insurance. It is tax-free. It bypasses probate, because in Canada, if anyone die, maybe a spouse die, the death of that spouse is not going to be written off. It's going to be transferred to the surviving spouse. And that is why when people die, from what I learned here in this part of the country, because where I come from, Nigeria, there are some people that they borrow money from certain microfinance bank, and once the borrower dies, they write off the debt. I come to learn that it's not the same. The debt will be passed on to the spouse, and this person will have to pay. And even if both of them has a joint account, this account will still go through probate. So no matter the amount of money that the dead person has on their accounts, they will have to remove all those things. Probate will get their own expenses before the family member can get the minimum. But when you have a life insurance, it bypasses probate. And that is what most of these top banks are doing. You keep our own money in banks to get little or no profits, but these banks are actually putting our money, they are putting their own savings in with insurance companies, and they get a lot of money from it, because it is any benefit you get from there is tax-free. You are not going to pay any tax from the money, and then it bypasses probate. In terms of economical, term is more cheaper, like I said earlier, compared to whole life and universal life. Then access to cash value. If you have a term life insurance, you don't have any access to cash value. You are only paying premium towards life insurance, no savings, no investment parts proportions to it. But for whole life and universal life, while you are alive and you have contributed into it over time, it will build up a cash value from which you can actually obtain money. You can withdraw, you can get loans. It's your money. While you are even alive, you will benefit from your policy. Then guaranteed minimum interest with whole life and universal. Tax advantages, the three of them, no matter the benefits you get from it, it is tax-free. You are not going to pay any tax. And the flexible premium payment is with Universal Life. And I also want to add to this, in my heart means that, I have insurance coverage at my job, my place of work. The truth is that it's good we have insurance at our job places. It's a good foundation, it's a strong foundation. But then the difference there is that the one we have at our place of work is just tied to our employer. We don't own it. Our employer has the control over it. But if you have your own personal one, you control your policy. You are in charge. And once we leave that job, because it is tied to the job, the policy is no longer in effect. You lose the insurance. And another thing is that the value of that insurance is not as much as when you set up your personal one. Take, for example, most employers, we only cover 1 to 2 times your annual income. For example, if I'm earning 50,000, so the life insurance my employer would do for me would just be like times 2, maybe like 100,000. And God forbid, if anything happens tomorrow, will 100,000 life insurance be okay for my family members to live on? So that is one question we should ask ourselves. But if you have a policy yourself and you're able to, work towards this, you are in control and you know much based on your family needs. Then another thing is that with this workplace life insurance, like I said earlier, it is actually tied to the job. If anything happens, loss of job, anything, that's just the end. So that is the difference between the one we have at work and when you have a personal one. So the one at work should actually be a bonus to us. It should be a top-up, while we also have our other personal policy. So I would like to go to the next slide. I think I'm almost done. So I'm going to end my presentation here. This will be the end. So my final message this evening is that your future is not something you enter. It's something you build. We have to be strategic, be intentional. You have to build it. You have to plan for it. It's not something that will just happen by luck. No, it doesn't happen that we have to work for it ourselves. We have to build it. We have to put in some measures in place before we can actually achieve that goal and that dream that we want. So it's something that we build, and then build wisely, intentionally, protect that income, and leave a legacy. Don't leave debt for your loved ones. If actually we love our family members, love is expressive. We should express it by having a proper coverage, proper protection, that we know that anything happens, that investment we have, that savings account doesn't just collapse overnight. There's a protection guarding it. We have something that will come and bail us out in such moments of unexpected occurrences. So I would also like to encourage us that we should leave a legacy and don't leave a debt to our loved ones. And I hope that God will help us as we take this. And I'm going to end this at this point. Thank you everyone for listening, and thanks to the organizers of this event, and also thanks to my organs. Thank you everyone.
Wow, thank you very much, Mrs. Apola B. That was a very wonderful presentation. Quickly, because of our time, we're going to call on Mr. Abel Adetunla to give us his own presentation. And for the whole house, if you have questions, please drop them on the chat so that we can start the interactive session after their presentations. Thank you. Mr. Abel.
Thank you so much, man. Just let me quickly share my screen. Can you see my screen, please?
Yes, we can. Thank you.
Yes. Foremost, I want to really appreciate this organization, AISIC. This is a great opportunity to reach out to our people in the areas where some of us will lack information. Actually, myself, I read finance, yet no one is being taught in school how to manage money. And we are not taught how money works. But I really appreciate God for the opportunity to learn this in Canada. Now, building wealth and protecting your future. Today, by the grace of God, I will be covering only 2 vehicles, and these are debt management and retirement. And all of us know that it is ironic that we live in one of the wealthiest countries in the world. But do we know that we always have money problem? If you have anybody, whoever you ask, do you have enough? The response will be no. When you go to somebody, I need $5,000. Can you borrow me $5,000? The response will be the same, no. But why? This is a country where debt becomes a way of life. And some of us, we are not looking into it because it's now becoming like a disease. Somebody said it's like a curse that everybody must go into debt. But brethren, we can live a debt-free life, which is very possible if we have the right education, which is financial education. Many of us live on credit card because it's easy to swipe. When we get to the store, we swipe it. And some of us, we live on line of credit because the money is given to us. And sometimes we look at it as if they are free money, but they are not free money. We have to pay back. And some of us, like car loans. Yes, it's good to buy good cars. You don't want your car to break down during winter. It's not funny at all. Children's student loan and the mortgages. But brethren, we need discipline and proper debt management to be able to live a debt and stress-free retirement lives. There is nobody more interested in your finances than you. Nobody is more interested in your financial future than you yourself. Because the system of this country is designed to take from us. It's designed to always take from you. And not that alone, if you lack necessary financial education, that is the worst of it. And that is why AISIC is bringing this to us this evening. It is your responsibility to learn the simple rules of how money works. If you don't know how money works, then, you know, the volume of what we face every day keep us down. Now, let's look into debt management. This will shock some of us. Recent surveys indicate many Canadians face significant financial stress, with roughly 31% reporting too much debt, 36% struggling to pay their bills, 27% rely on borrowing for daily expenses, 40% have mortgages as their primary debt, 31% feel they have too much debt, and 17% have monthly spending that exceed their income. It will not shock us that so many families, they live paycheck to paycheck. After the end of biweekly, they are waiting for another one. As the biweekly is coming into the account, they are all going out the same way they come in. That's the same way they are leaving the account. Nothing is left behind. Why? Because there are so much debt. So what is even debt? Debt is financial obligation arising from borrowing to make purchases, such as loan, mortgages, or credit card debt, especially to a financial institution. These are the debts that we owe to financial institution: mortgages, our credit card, line of credit, and some other loans. And also we have non-lenders. We also owe to non-lenders like government. Every one of us, we owe government our income taxes. Even before our money get to us, government have taken their taxes, they've taken it out of it. And sometimes there might be fines from government. So also we have service provider, our internet provider, our phone provider, our bills, and all the services. Then some of us still go to the length of borrowing from friends and family. All these put together are debts. And this caveat, I want to put this to us. Control your debt, or debt will control you. So many people that fail to control their debt, debt has put them in a muddy water. And they don't even know how to get out of it. Some people, their credit history has been destroyed because they couldn't get out of debt. Because of our time, we have different types of debts. Especially we have two, which is secured and unsecured debts. The secured debts, they are products backed by collateral. For example, it includes car loan, mortgages, home equity, line of credit, and secure credit card. All these loans are tied to an asset. When we get mortgages, it's tied to our house. Car loan is tied to that car. And the unsecured credit are debts that are not backed by collateral. It's not tied to any asset. It's not tied to any property. Examples are personal loans. Maybe loans we get from friends, from family, credit cards, utility bills. Then creditors approve them based on your credit history. All these service providers, they just check our credit history before they approve all this loan to us. But brethren, can we see that there are two different loans? There are good debt and there are bad debt. The good, the bad, and the ugly. Yes, there are some debts that are good, but there are some debts that are bad. The mortgages are good debt. Education loan, student loan, they are good debts. The money we borrowed to finance our businesses, they are good debt. But that bad debt, credit card is one of the bad debts. If anybody has a credit card that is paying only the minimum payment, it's a bad debt. It's a bad debt. Consumption loan to buy clothes, to buy shoes, they are bad debts. Have a lifestyle, to buy flashy cars, debt to buy flashy cars, they are bad debts. Good debts helps you achieve important goals. When we have goals, when we have set out goals, we can take loan to finance such goals. Those are good debts. And the debts that we take to increase our net worth. I've seen people that borrows, to buy shares. They are good debts. Or however, to generate income and improve your financial futures. They are good debts. And conversely, any debt that negatively impacts your finances and make it hard for you to save, they are bad debts. They are bad debts. What are the causes of debts? There are so many actions and decisions that may result in debt accumulation. When we are spending against our budget, you have budgeted that, okay, this month I won't spend more than $1,000. But because we couldn't control ourselves, we couldn't control our impulsive, and we are spending beyond our budget. How about spending without having budget at all? There are some people, they have no budget, no precise plan on how their money is to be spent. How about to rely on credit card for every transaction because it's easy to swipe. Even when you know that you can't pay it back, you just go to the store. How much is it? Okay, see the price. I love it. We swipe. How about impulsive buying? Buying things that we don't need. Buying all the wants. I want it, I get it, but we don't need it. How about living above means? Living other people's life. Living to please others. And the last one is divorce. Divorce is one of the causes of debt in this place. Because when people go into divorce, they will be spending on 2 houses, even the legal aspect of it. I have a friend, a lawyer, he told me that at least it's 10,000, at least. It's nothing less than 10,000. 10,000, some are 15,000, some are 18,000. Just to dissolve a marriage. So what are the solutions? What are the panacea to debt infection? Because debt is a disease. Debt is a disease. What are the panacea? Getting out of debt or avoiding drowning debt require refight and discipline. It is easy to get into debt, but it's difficult to get out of debt in this country. If you borrow $10,000, if care is not taken, it might take you 10,000. It might take you 10 years to pay back. Because in the course of paying it back, if that person have no control, you'll be getting more into more debts and to be accumulating. If you don't need it, don't buy it. That's the best solution to get into debt. Ask yourself, when you go into store and you pick those items, I do it a lot. Sometimes I pick items, before I get to the cashier, I will just think about it. Do I need it? Then I will just drop it. I like it, but do I need it? No. Live your life and not to please any. Live your life. Don't live another person's life. Live for yourself. Live a life that glorifies God, not just to impress anyone. Then, if possible, live below your means. The general saying is that live within your means. When you live within your means, it's like you are walking at the edge. You might slide into debt, but live below your means. When you live below your means, that is when you can have enough left to save. Avoid spending more than your income. Use cash always, if possible. If I budgeted that you are spending $200, have that $200 with you. When you finish, that is it. Always have a stringent budget. Avoid spending beyond what you have budgeted. Learn to write down your budget. And My boss told me also, learn how to make more money. That also is a panacea of getting out of debt. And where can you make extra money? My boss will tell you more about that. If you get extra 3,000, 2,000 every month, doing just a little, right from the corner of your room, it will solve a lot of problems. Now, I'll quickly move to retirement because of our time. We don't want to waste much of our time. Retirement. Every one of us, especially some of us that came to this place in our 40s, in our 50s, how much can we save for our retirement? One of my place of work, whenever they send me my statement that if you retire at 65, I have one that sent me maybe like 2 or 3 years ago and they said they will be paying me $400. $400 might not even be enough for shopping once with the rate of inflation. So what are we doing to plan towards our retirement is necessary. Every one of us, we can't keep working. Especially with at least, I won't say we are older ones, but at least a little. See, anyone that is a senior has little time to work because I don't pray to work beyond 65. I know in my place of work, I see some people 70, they are still working. That is not life. So when I check the definition of retirement, in Wikipedia define retirement as the withdrawal from one's position or occupation or from one active working life. A person may also semi-retire by reducing work hour or workload. There are some people, they retire totally, they leave the place of work, and if they have enough money saved, they start enjoying their retirement when they still have the strength, when their health is still okay. But some people that doesn't have much, I've met some people that have RRS, SP, and they have dipped their hand into it to go for vacation while still working. But if somebody don't have enough saved, one might also just semi-retire, maybe reduce the number of hours or workload. Retirement was not an urgent issue. It's an issue that you have to be intent and plan towards it. It's very crucial to adequately plan out. Facing a mountain of financial decisions as retirement approaches can be daunting. When you retire, that means your source of income either cut to half. If anybody is thinking of where to get extra money aside pension, old age allowance, how much is it? The highest is 1,200. And as many that have worked for certain years might not get the maximum. The maximum is for people that don't really work. You deserve to retire with peace of mind. There is nothing like to retire rich. If anybody retire poor, it's a great pain when you need money and you don't have it. Before I leave that side, sorry. Now, when one retires, that is that age, one will need more medicals. There are some medication that your insurance might not cover at that time. There are some procedure that one might need to pay out of pocket. And at that time, your expenses will not reduce. When you retire, your expenses will not reduce. You still be paying your mortgage if you have not paid it off. If you still have children in school, you still paying their tuition fee. And that is if you don't have RESP. Maybe my boss will talk about that, RESP. Then, if you don't have enough saving also, there's no way it's going to be an heartache at retirement if you don't have enough savings. And finally, my sister have talked so much about insurance. If you don't have insurance, before the end of today, please talk to any of us and set it up. What are the category of retirement plans? We have defined benefit and the defined contribution plan. The defined benefit could also be referred to as a traditional pension. It pays a retiree a specific benefit based on years of service and salary level until they die. In this situation, it's only the employer that contributes into it. And this is fading out. Most employers are not ready to do this anymore. But the second one, defined contribution plan, which is known as a pension plan, where you and your employer set aside money for your retirement. Both employer and employee, they contribute certain percentage of employee income, usually to the maximum of 18% over the time that you are working. It's 50-50. You contribute 50, your employer contribute 50. And when you retire, you have the money. The question is, are you saving If you are saving, are you saving enough? What are the difference between the two? Defined benefit and defined contribution. Defined contribution, how much is going into the plan, depending on the market and how much your investment have earned when you retire. Because whatever you are contributing is going into investment. My Oga also will talk more about investment. Maybe he's going to talk about segregation. As many of us that have our investment in the bank, I'm a living testimony. When I have all our money in the bank, our RESP and some other investment, so many times we get statements and it comes back with red. They've lost part of our money. Not until when I started this business that I started investing my money in insurance. I started investing my money in segregated. Then I started seeing increase in my investment. Then what do you contribute to the maximum of 18%? As I said earlier on, what does your employer contribute? Usually a percentage of the employee's income, maximum of 18%. Then how does taxes work? The money you contribute is tax deductible. The money you earn from investment won't be taxed until you withdraw it. And the last one, the defined benefits. How much you are going to get out of the plan. It is determined by a formula based on how long you have worked and your average earning in your best years. I said earlier on that most employers are no longer using this one anymore. They want you also to participate, to contribute into it. So what do you contribute? You may or may not contribute. If you do, you are usually required to pay less than half of the benefit. So what does your employer contribute? Employer must usually contribute at least half of the benefit. And lastly, how does the taxes work? The money you contribute is also tax deductible. The money you earn from investment won't be taxed until you withdraw it. Because of our time, I'm going to stop here and call my SMD to take over. Thank you so much for the time. Sister Antonia.
Thank you very much, sir. That was, in fact, a table-shaking presentation because there's something for everyone to take out of it. Thank you very much for that presentation. And please, to all the participants, feel free to start dropping your questions so that you can engage with those questions as soon as the last speaker is done. So without wasting much time, I'll call on our third speaker, and that's the last speaker for today, Mr. Martins. Please, you have the floor. Thank you very much.
Can you grant me sharing right? Did you do? You did?
I think you should be able to share.
I'm still not able to. Maybe you want to stop sharing fully. I think because you were sharing still.
Yeah.
Good evening, everyone. I think I have to first of all start with pronouncing my last name, right? Which is
yes.
Onwaninku. That is my last name. I am from Nigeria. I am from Delta State. So it's my pleasure being here. It's a burden we have here to be able to educate families because we have discovered that there is a linear relationship between financial education and financial independence. And until you are really financially educated, you might not be worthy. And if we know that financial education is very important to becoming worthy, we just have to get people educated. So we are on a mission to educate 30 million people by 2030. And we have done so well. And our community will not be left behind because our mission is no family left behind. So again, thank you, Abel. Thank you, Patience, for what you have just done. I am glad, and I am going to take a little bit of summarizing what both of you have done. So our goal is to make sure families are okay. Many people go to study accounting in the university or finance like Abel. When they come out, their goal is to make organizations to be okay. But our goal as financial professionals is to make sure that families are okay. Abel mentioned it in terms of retirement. Can we get families to be okay in terms of retirement? Abel mentioned debt management. Can we get family to manage their debt? Because if they don't manage their debt, their future is not assured. Patience mentioned protection, and that is very critical because we need financial protection. The very first foundation is protection. And so all these things are very important. And our community needs to know this. And so we are doing this one at a time. And so we are actually glad that we are doing this one in 60. I'm sure we have 60 now. So this is a very good opportunity to do meet multiple of people at one time. So families is very crucial for us because it's one of the most neglected part of the society. And we are taking care of families. And more importantly, the traditional organizations, they are doing one thing, they are paying attention to the wealthy. Most times, if you don't have enough money, most organizations don't pay attention to your investment. And so we have people who are just 5% that they are focusing on. So we are focusing on a population that is between zero, people making income between $0 and $100,000. How do we move those people from income level of $0 to $100,000 to income level where they begin to make bigger money like $250,000, $500,000 and create good wealth for themselves? That's what we are focusing on. So today we are going to learn something very important that will help us actually do that. So helping families build a solid financial foundation. I have mentioned all of this, that this is our financial literacy campaign. We are doing 30 million by 2030. And I'm glad that you are part of this campaign. So why are we in this? Because there's a guy, very great guy in Nigeria, they would have called this guy central bank governor. That this is what they call their central bank governor, the chairman of Federal Reserve. So he said the number one problem in today's generation and economy is lack of financial literacy, right? And because of that, we have a workshop. So every one of you that will be interested, link up with any one of us to get a link to this workshop. It's for free, you don't have to pay. And we do it Monday to Friday, 3 times in a day, workshop, training people to become financially literate, because we understand the significance of being wealthy. And that the only way you can be very wealthy is that you must have financial education. For if you understand that, it's no brainer than to just put this in place. And you can see the topic that we teach every single day, right? What is our mission? Our mission is clear. Our mission is to help people move from financial insecurity. You best spend time to talk is about people being financially insecure and how they can get out of that. And that is our mission. How do we get you out of financial insecurity to financial security and ultimately to financial independence? That's our mission. We want to share with people our financial concepts such that Abel and Patience were sharing with you right now, so that people can increase their cash flow. Do you hear if you can raise up your hand, anyone of whether want to make more money on a part-time basis, extra $2,000, $3,000, $4,000 on a part-time basis. I was like that. I needed to make more money. And that was why I came into this opportunity. And I was so interested because family need cash flow. Abel mentioned a lot of debt problem and how to solve it. And I was quick to tell him that one of the best way to solve debt problem is to make more money. How about manage your debts, and how about create an emergency fund like spoke extensively about? How about protection? She spoke about this also. These are the concepts we teach you, and you can build a long-term asset and preserve their estate. So what is all about? Building a solid financial foundation. So you need to understand that building a house, you must have to start from ground up. When I came to Canada, and just like any one of you, if I interview you, all of you, is about the same thing, almost 99% the same thing. I brought in money. I was a banker. I had some money, and I brought in some money. And I went to the bank, and I kept the money in TD Bank. The first thing they told me was to invest, which was like the roof. Nobody talked to me about protection. And if I had died before I joined this organization, doing what I am doing right now, I would have died for free. Thank God, if I die today, there's no way my family will get less than $1 million. No way. It's way more than that. So this was how I was. But I have some money in investment when I started. Just about $5,000 in investment I had when I started. All of these ones were all zero. In fact, debt was about $50,000 because I was trying to pursue becoming a CPA, and I've accumulated already $50,000. But what do you need now? I am talking to you in practical terms right now. What do you need? protection, you need a life insurance to take care of your family 10 times of your current income. That is what you need. We need to get you to a level where you become debt-free. We need to make sure that you have 6 months of your monthly income stuck in emergency fund. No credit card, no debit card on it, except when you need it for emergency. And for your retirement, Abel talked about retirement. I just wanted to add one thing more, that retirement is not a function of age. It's a function of how much you have. If you have enough money to retire today, you can retire even today. 20 times of your current income is what you need to face retirement. Remember that at 65, you still have about 100 years to live, depending on when God wants to call you. That is 35 years of no job, and you have to spend money. So proper documentation, you need to put a documentation in place for your family so that if anything happens at any time, they know exactly what to do with money you have put aside, right? So that is very important. You can take a picture of this if you like. It's very important for you. That is how to build a solid foundation. You start with debt management, proper protection. Manage your debts and build emergency fund. Because if you don't have emergency fund, whenever any wahala comes, you are back to debt, you are back to swiping your credit card, and then you do investments. So without a strong financial house won't stand. If you don't build it like this, imagine you have $100,000, suddenly somebody becomes sick in your family. That 100,000 is going to collapse. We call it spending down. No money coming in anymore. That's why investment is not the first thing you do. Protection, life insurance, disability. Patient mentioned a whole lot of them. Critical illness insurance is what you start first. How do we do this? We share our saving your future strategy and workshop. That's what we share. You understand the financial concept. You have to understand it. In Nigeria, it's very easy to get rich and get wealthy. All I need to do is to be PA to Bola Tinubu and maid. People will know very soon that there's somebody that is a PA in my village. But here, you need to understand that there's a formula to make money work. If you like, be the or whatever to the prime minister. Prime minister's salary is not up to $400,000. I think I earn more money than the prime minister of Canada. So you see, that's the problem here. Okay. You need to know all of this. Know your clients. You need to know the solution that is available. You need to start a plan. So let's look at this one carefully. So you need to understand that saving to save your future is very important. The first step of somebody that has money in the bank is different from somebody that is in debt. The way they work, two of them are radically different. So you need to work well. You need to have money in the bank. Basic principle of building a financial foundation. I would recommend that most of you catch up with this book. It's very interesting. You can get in touch with us. We can send a copy to you. We have a copy of it. You can read it. The basic principle of building a financial foundation. And this is the principle. I'm going to skip this one. I've talked about the workshop already. I'm going to stick, but we are going to come back to it. So I come here and I said, you need a financial checkup. Every one of us, you need routine financial checkup at least once or twice a year, just the same way you go to the hospital to tell the doctor to check me up. What are your major concerns? These guys have mentioned all of this. But more importantly, I need to emphasize lack of financial knowledge. It is not about being a CPA. It's not about studying, going to Aspa School of Business to study finance or accounting. It's about family finance, right? So you need to get what is your plan less than 1 year. What is your plan 1 year to 5 years? What is your plan 5 years plus? If you have the will, man, we can provide you the vehicle to succeed here, right? Financial security is not a dream, but it's a priority. I said it already. You can always see a doctor. You cannot see a doctor once and expect to stay healthy. True with your car, which needs regular maintenance. Your financial situation also need to be reviewed on a regular basis. So you see, we are very fortunate that we power with the best of the best that are offered insurance, offered health solutions, debt solutions, educational solutions, and investment and estate management. These are companies, you can look up on this company. They are all very great companies. You see BMO, RBC, they are all here. Manulife is the best insurance company here. It is here. So let's take a hypothetical case study of Miss Plan Good Life. Her age is 30, and I'm sure most of you are 30 or in that neighborhood. is heady. Patients talk about health. You don't buy insurance with money per se. You buy insurance with health. If you don't have good health, you can't have it. No, so however, there are solutions for you to have it, but you pay a lot. Non-smoker, monthly savings is $500. That is all about $17 a day. And he wants to contribute into a plan that for 30 years, and we expected rate of return is 7%. So this is a typical investment, like every one of us said, I want to invest my money first. That is what I want. So $6,000 in a year, and look at how much he made. 30 years time, he has already saved 180. I hope you guys can see my screen, right? Can you see the numbers? Anybody tell me?
Yes,
okay.
You can see it.
So you see this guy, this lady invested 180,000, and the money has grown at 7% to 609,000. This is awesome, right? But let's see how protection is important to us. This thing comes up again, and I'm talking of you about protection. Let's look at protection. What are you protecting? I want to protect my income. Let's say I'm 50 years old. I earn $100,000. I retire by the age of 65. If I keep that job till age 65, I would have brought into my family 1.5 million. What if I die today? 1.5 million is gone. My family cannot have it. Can I protect that income? Yes, I take an insurance of 1.5 million to protect my income for my family. That's clear. Your health and alive, savings and assets. That's the same way I protect my assets. Now let's look at it. These are the risks we face in our life. Risk of premature death is there. I know of somebody, before I traveled, they were telling me that the person just died not too long ago in Nigeria and here. Many people died even in their 30s, in their 40s years. Students of University of Manitoba, we've seen them die, even those very young age. What is the risk we have? Abel was talking about retirement. People are living long because there's medical advancement. The risk of running out of money because you live long. What are the risk of illness? The question is not if sickness comes, it's when. And when it comes, are you prepared? Then what do you need to do? Needs to build wealth. And then the goal of legacy and wealth transfer. How do I pass all I have built to my family in a most tax-efficient manner? Then that's what protection tells you, premature death. Retirement income comes in here and living benefits. What do I get when I'm alive? If I'm sick today? The question I will ask everybody, I pause to ask you question is this. How long can you survive if you were to stop working today? How long can you pay your bills? Is there anybody that can tell me? Can you pay your bill for more than 1 month? Abel was mentioning something that we are living paycheck to paycheck. I think I'll add one thing to it. We are one paycheck away from bankruptcy, right? So you can see, can you build wealth in a tax-free environment? I know we love Canada. Everybody loves Canada very well, right? But do we love paying tax so much? I think we have to determine that if paying tax, you could reduce your tax legitimately. Is this something you want to learn about? That's why we are here, right? It's tax season. So this young lady, instead of doing the investment, decided to do a life insurance and took a $1 million death benefit. If the lady were to die, they will pay the family $1 million. And he's 35 years old, and he took a critical illness insurance in case he's diagnosed of a critical illness such as cancer, heart attack, stroke, and all of that. He gets paid $100,000, and then he's paying $500, the same amount he would have paid in the other investments. Same interest rate, 7%. Let's see what happened here and how we can combine all these things. He pays $6,000, he starts building cash. Patience was telling us carefully that when you contribute $6,000, certain amount is saved for you and certain amount is taken to the insurance. That's the amount. This is what you can pull out at every year you want to pull out money. But this lady carefully saved this money for 30 years, same amount of time that we had before. And the total money he saved was $180,000. That was what he contributed into the insurance. But you guys know what? At age 65, at age 60, she was done. 65, she was, how much has she paid? $180,000. She has accumulated at age 65, $677,000. And at retirement, this lady started collecting $63,410 from the life insurance to fund his retirement, tax-free. And he keep funding this money. Watch out what you see here. He was able to collect money for 35 years from 65 to age 100. And how much did she collect? She collect 2.2 million. Do you know how much you need for retirement the day you retire? The standard in Canada is 1.2 million, 1.3 million is what you need to retire to say that you retire well. But this lady retired and was able to pull out $2.2 million. And how much did she contribute in all? $180,000. That's all. Then what happened at the age of 100? He was able to pass some money down to the family, even after she has used $2.2 million. This is no-brainer. And this is what we set up, how we sit down with family, review your finances and how we can plan for you. When is the best time to get this thing set up? Now. When is the best time to get it set up for your spouse? Now. When is the best time to set it up for your children? Now. I have this for my children. Their cash value has grown almost to $5,000. You know the critical thing why you need to prepare protection, because 1 in 2 Canadian, 49% of men and 45% of women are expected to develop cancer in their lifetime. Isn't that shocking? And 1 in 3 stroke victims are of 65. And 1 in heart attack victims are under the age of 65. So this lady was able to put $100,000 down in case any of this thing happened. Like I said, it's not if, it's when. So what is it? Anything you are doing, whether there must be growth, there must be safety, there must be a tax advantage, there must be protection. If any of this is missing in what you are doing, there is a challenge, right? So let's analyze this lady carefully. We're using these parameters that we have very carefully. And you see it, how this lady was able to put himself right perspective. You see it, 6 to 8% of growth. Growth, we emphasize it. Tax advantage, he gets $635,000 tax-free at the age of 65. Between 65 and 100, he gets $63,410 every single year tax-free. Total income he pulled out tax-free is this amount. Look at protection. At 65, he had $1 million. And final death benefit at 90 is $1.6 million he passed to the family. And you see, he has a living benefit and critical illness of $100,000. You want to talk of safety, dollar cost averaging is there, and professional managers are there and is diversified, right? So what is the tax advantage? Do you know how much it will take? How much it will take for you to be able to earn $63,000 after tax money? You would have to earn about $90,000 for you to be able to be earning after tax money of 63. And that is what this lady began to earn at 66 and earn it to 100 years. Never going to run out of money, right? So that is what you see here. And you have the final analysis of what the lady enjoyed. Living while he's alive, you get 100,000 if he gets sick. This is planning and setting down. Patients spoke about something that you don't enter into a good life like that. You have to plan it. You don't just enter into it. And that's why you see premature risk in case of death prematurely is covered $1.1 million. It's covered there. If he died, the family is okay. $1 million is given to him. It's actually $1.6 million at the age of 65. Tax advantage, look at it. He has $635,000 plus cash value. No tax paid on it. And the death benefit is tax-free as well. All the money he pulled out, $63,000 is tax-free. And if he passes away, $1.6 million is given to the family tax-free. That's what you see here. And, you can do a proper planning here. All these ages now, retirement, death, and age 100, everything taken care of because we have to sit down to plan about it. Patients talk about probate. Look at it. If you have it, you will be able to, life insurance bypasses probate. No legal fee, nothing whatsoever. No lawyer is involved. All of these are here. Living expenses are covered. And everything you can think of is covered. You want to rely on CPP, will not be enough. Your ROISP is not enough. Set up a life insurance and get it work for yourself. Okay? So on a final note, I just want to I just want to show you something and then get you into the final thought. People who understand how money works, they let money work for them. That is what the wealthy do. Wealthy people spend time learning and understanding how money works. Wealthy people look for advice and solution to get better return for their money. That is why you need to contact us. And that is why also, if you want to learn this, you can actually get in touch with us. The patients you saw today that spoke, in fact, she did even better than me that study all these business-related courses and work in the bank. A nurse has been, that is a 360-degree turn. I met patients in a presentation like this. And after I finished, she gave me a call and said, I want to do what you are doing. And that's why we get, this is less than 6 months he has been doing this. And you can see the quality of our presentation. I think is even better than mine, right? So you can see that we can produce and train you with speed. People who don't understand how money works, they end up working for money. Do you want to work for money for the rest of your life? No. A lot of poor people lack knowledge about personal finance and don't care to understand. Poor people have no plan and little savings, and the savings they have are usually put in an account with a low rate of return, and their money doesn't work for them, right? So critical questions I want to ask every one of you. When life happened to the wealthy, what do you think that happened to them? When the wealthy get sick, they become richer. Why? Because they get what they call terminal illness benefit. They get long-term care benefit. They get lump sum critical illness payout. They get second opinion from medical advice, and they even get richer. But what of when the poor and the middle class, they get sick? They become poorer when they get sick because they made no plan, right? So how many days forward could you survive if you were to stop working today? What account do you have that bypasses probate? And what account do you have that is tax-free? You can see how their lady enjoy tax-free benefits. What account do you have for your children that will make your children go to school without a student loan? I'm sure your father did not train you through student loan. Thank you so much. Antonia, thank you so much for your opening comments. And thank you for inviting us. God bless you all. Amen.
Wow. Let's give them a virtual round of applause. Thank you, Mr. Martins. Thank you very much. Apologies, we might be running behind schedule, but we have some questions for you. We are very happy to have heard from you all, Mr. Martins, Mr. Detunla, and Mrs. Afolabi. Thank you so much for all the insights, on how we can build wealth. And the summary of the today's presentation, when Mrs. Afolabi took her presentation, the key takeaways was that wealth is not just about income, but is what gives you peace of mind, and proper protection of assets is very essential for us, and that your future is not something you simply step into; it's something you deliberately build. And Mr. Adetola, he gave a table shaking, presentation. He told us the causes of debt, spending without a budget, relying heavily on credit card for every transaction you make, and impulsive buying, living to impress or please other people, and living. We should not live not just within our means, but we should live below our means, so that you have that gap. You have that space, to fall back in. So it's not just when you are faced with any financial stress, you're already, on the ground. And avoid spending more than your income, build multiple streams of income, avoid misusing long-term assets for short-term pleasure. It's specifically mentioned using your RRSP, for vacations. These are financial mistakes that most people make. And then he talked about retirement. So proper retirement planning is essential. I know we have so many people here that are close to their retirement age, and without it, Even after years of work, I've personally seen some people who return to taking roles like substitute EAs, in school boards after they retired when they're supposed to be rested. So these are mistakes that we shouldn't do. And Mr. Martins, thank you. He told us that it's crucial to learn how to save for our future. Everybody needs, that financial checkup, just like you take your vehicle for maintenance or you take yourself to the doctors. It's very necessary for us to have financial checkup to assess our current financial situation and plan ahead. And we should always build with the future in mind, make deliberate choices that can secure your tomorrow. And one powerful question he posed to us during the session is, how long will you survive if you suddenly lose your source of income? How long will you survive? Are you living paycheck to paycheck? Do you now resort to borrowing and all that? And this question reminds us to plan carefully, maintain your emergency savings, and protect your financial stability. Thank you so much, Sazama, for our participants. I will just quickly throw the questions to our presenters today so that they can provide clarification. The first question I have here is, how much will be good for life insurance? Somebody is asking. I will just ask all the questions if you can quickly take note of them so that you can run through them, because we really do not have time again. And then the first one, how long will be good for life insurance? The second one, as a new immigrant from a completely different system from the 1 year that's in Canada, what should be the first and major step to financial literacy and independence? So what should be the first major step to financial literacy and independence? And the third question is, if I do the insurance with investment, at what rate would my cash value grow? And is this investment susceptible to dividends? Somebody is asking, is it susceptible to dividends? So if you can help us answer those three questions. Thank you.
Okay, so let me provide. So someone asks, how much can I pay for life insurance? Is that a question?
Yes. Yeah.
So
how much?
So
yeah,
what you pay or what you contribute to life insurance is called premium.
Yeah.
So the premium you pay depends on a number of factors. Number one is your age. Number two is the amount of insurance you want as a death benefit. And then number three is your health status. And then number four is your driving record. So all these are factors that affect the premium. So the older you are, the more you pay. That's why you need to do it now before you get so old, right? Then the other question is saying new immigrants, their first step. Well, let me take a dive back to myself. I came to Canada in 2011, and 3 months I had no job. I was looking for a job. So I wish I knew about this opportunity for myself. I would have used the opportunity to learn a lot about finances. As a part of settling down, financial knowledge is very key. Because here is different. I worked in the bank. There was nothing like credit card in the bank. The card they give you is a cashback credit card or a card, not credit card even. So if you wanted to have money in your card, you will load your own money into the card. That was what we have in the bank. But here, when I came, they just gave me $1,000 credit card limit. Before, in the next 3 months, they have increased it to 3,000. Before I realized it increased to 10,000, and they are whetting my appetite to spend money. So, and you don't know about the interest rate and so many other things you don't know. So learning about financial literacy is very, very key, because no matter what you do, everything in life revolves around money. Like I always tell people, God is the ultimate in our life. After God, every one of us are chasing money. So the next thing is money. So you get to understand about the money. You want to be a nurse, you struggle to be a nurse for 4 years, nobody teach you about financial literacy. But the byproduct of your coming out and becoming a nurse and helping people recover is money. They pay you money. It's what goes into your account. So I encourage you to learn about financial literacy. It's very key. And it doesn't take much. Like I told you, we have a workshop every Monday to Friday. You can attend. It's spread out 3 times in a day. So if you are working in the day, you have in the night to attend. If you are working in the night, you have in the day to attend. So seek to have financial knowledge is very important. That will be my advice as your first step. And if you have your job already, you can take this opportunity as a part-time. And like my story, I had this opportunity as a part-time, and I was making less than $5,000 in 2 jobs. I do 2 healthcare jobs, $5,000, less than $5,000 in a month. But after some time, I realized that I am meant for more, and I am not to settle for less. So that's how I ventured seriously into this. And you can see the outcome was $250,000 that was paid to me last year from this venture. So that's what it is like. So if you can take a little bit step here, there are a lot of families to be helped. Immigrants are coming here every single day, and they don't have life plan. They don't have life insurance. They don't have investment. They need you to help them. Okay. And then insurance rate. I don't get the question about insurance rate properly.
Okay. The question is, if I do insurance with investments, at what rate would my cash value grow? This might need like you simulating it with some figures actually.
So usually your money there. So this is the way it works. If you are paying $100, about $20 is going to insurance for what they call cost of insurance, and about $80 is going to your savings and investment. And they are secured investment where this money is put in. And the average rate of return is between 6% to 13%. That is the average rate of return. It could be more, it could be less, but that is the average rate of return we have gotten. Right? Is that clear? Do we have more questions?
Okay, sorry. I'm not sure you answered the B part of the question. Or to Mrs.
The one that say how long?
Yeah, the B part is it susceptible to dividends? Or
Yeah.
Mrs. Are you correct?
Okay, yeah. So dividend is to get dividend, you need to do a type of insurance that the one a patient talked about, whole life. If you are doing a whole life, then you will be paid annual dividends. Dividends are not guaranteed, but the insurance companies that we work with for the past 30 years, they've never missed 1 year in paying dividend. So yes, you get dividend, but the dividend is from whole life. Is that okay?
Thank you very much. If there are any questions, you can still drop them like on the group chat, and we'll find a way to get the presenters to answer your questions.